Stock market today analysis for Aloha Monday, March 13th, 2023. Look at this. It's 3 plus 10, 13, plus another 10, 23. Amazing, huh? In the description below this video, you'll find a link to I Have Success. Going back as far as 2013, 2014, I came to the realization that if you have an internet connection, a bank account, and you spend money at least once a year, you have no legitimate reason not to be selling cash secured put options on stocks that you'd be happy to own. And this strategy, this is a very, very good basic beginner strategy. There's a little bit of complexity to it, but overall it's easy. It's not really simple because it has a few different moving parts. You got to learn these different moving parts. But other than that, I mean, it's easy once you know how to do it. And sometimes, knowing why gives you an easier reason to learn the how. So right there at the 1 minute mark, a video popped up that will give you 5 reasons why you should be doing this. As I mentioned, people that know why usually have an easier time figuring out the how-tos. So you don't have to watch that video right now. Wait until this one is done. It's at the 1 minute mark. It's really easy. Easy to remember. 1, because 1 is basically the number after 0, and it comes before all the other numbers. So easy for you to remember. So you can go back and watch that. I got free stuff on here. I got a 5 video YouTube playlist. When you use it in conjunction with these free downloads, you should have some theoretical knowledge to get this proper pronoun strategy firing up for yourself. If you need a little more help, I got personalized consulting here. But let me be clear on one thing here. Now, if you, let's say you're like my buddy. My buddy, him and his wife, they run let's say somewhere between a small to medium-sized business. Compared to Amazon, it's probably small, but compared to other businesses, it's probably medium. So depending on your perspective, and it's a bit less, depending on your perspective, it falls somewhere between small to medium. And the business is open 7 days a week, and they usually work 6 days. And I'm sure on the 7th day they're probably somewhat paying attention, but there's management people in place and things like that, so they don't have to be fully, focused. But overall, they're basically working about 6 days a week. And so not only do they have this business going, but they got 3 kids. The oldest is I think 11, and maybe the youngest is 2, and they got 1 in the middle somewhere, maybe 7. And so basically, they're doing pretty well overall. They good people. You got 3 kids. Their kids are pretty much a pleasure to be around. I've been around all the kids before. They're a pleasure to be around the kids. Good overall, good community people that care about their community, help out the community, help out other people, and overall work hard, and provide jobs for people and give a great service for people. But they're busy, right? They're busy with raising the kids. They're busy dealing with the business. Now, this strategy would be a perfect strategy for my buddy and his wife. Perfect strategy, because you don't really got to pay a whole lot of attention to it. You gotta understand the different nuances. You gotta have an understanding of that. But after that, it's kind of a set it and forget it. It's not completely forget it. But have you ever heard of the tortoise and the hare? If you haven't heard of the tortoise and the hare, look that up after you watch this video. Now, this is the tortoise. This is the slow and steady. This is not day trading. This is not get rich quick. This is slow and steady. This is having money work for you that's probably going to be safer than having it stuck here in these banks that are getting bailed out. So if that sounds good to you, check out the I Have Success link in the description below this video and go through there, check out stuff. If you want to talk to me, hit me up here at this contact us, and either me, myself, or I will get back with you. There's only 3 of us that work here, me, myself, and I, and one of us will get back to you. But we see, woohoo, you probably heard about it. If you haven't and you're still trading, good for you. Wouldn't it be great if you didn't have to pay attention? I mean, great for me if I didn't have to pay attention to any news and I just traded. But I started paying attention to news lately just because I'm over here making videos on YouTube trying to make things more exciting for myself. So we got these bank bailouts coming up here. The bailouts are back. Well, according to some sources that I know of, bail-ins might be right around the corner too. So maybe when the small regional banks, maybe they'll get the bailouts. But if the big if the big names, if they start needing something, it might be some bank bail-ins. We'll see about that. So we see all these red things right here. That's this week. These are all different high impact, right? High impact expected. It already happened. They had an emergency announcement on Sunday. Here we are on Monday. Tomorrow we got that's CPI coming out, which is your Consumer Price Index. We got that month over month, going year over year, and then they got the core CPI. And I think the core CPI is when they cut out the core things like food, right? Because if they put food in there, the number would be too high. So the government, they like to cook those books. I guess they took some accounting tips from Enron on how to do some bookkeeping, and they took out the stuff that's going to make those numbers look bad. So then we got the Producers Price Index coming over here on Wednesday. We got these retail sales, Empire State Manufacturing Index, and more stuff. Monetary policy statement, main refinancing rate. What's this one? Oh, preliminary. Oh, University of Michigan. Look at that. Are you Wolverines fans, or are you Michigan State fans, or are you none of the above? So we got a lot of stuff going on here. Markets are probably going to be pretty volatile, and when we look here, we see that we got advancing versus declining. We got more red than green, so we got more declining. Look at these new lows, almost 97.5% of these stocks that they're looking at making new lows. Below the 50-day moving average, woohoo, got 80% of them. Below the 200-day moving average, almost 70. And so let's take a look at. Right now we're looking at the futures, right? If you're a beginner, you don't want to trade the futures as a beginner, but you can use the futures as sort of like the future of what the stock market might do. Now, they're not called the futures because of that. I'm using a play on words there. But these will be trading. These futures will be trading basically about 23 hours, maybe 24 hours, 5 days a week. So right now we're in 7 p.m. Hawaiian Standard Time, and futures still trading. This one is for the S&P 500. This is for the Dow Jones. This is for the NASDAQ, and this is for the Russell 2000. Look what Bitcoin did today. Boom, popped up. Look what silver did today. Boom, popped up. Look what I guess silver over the last 2 days. Gold. This is pretty interesting. Look at the size of this candle. This candle bigger. This one even bigger. So that's a lot of bullishness. Also, take a look at this volume coming in there, and look at this over the 3 days. Boom, volume coming up more. Now we're in a bit of a pullback, but this is a picture of a possible strong bull trend. But definitely, when we see some big volume like this has got to be some pretty big amount of money in there. Institutional players probably in there. And my beloved WTI crude oil is closer to the 72 than the 80. And so I will watch that. You can believe me, like a hawk. I'll be flipping watching that. And the 10-year treasury, well, look at that, sold off. VIX, we're just going to kind of ignore the VIX a little bit. And we'll get into these, what I consider the daily markets. The dollar, look at this. The dollar came up to this 200-day moving average. And look at 1, 2, 3, 4 trading days, all the way back down here again. Looking pretty weak. Dollar's looking pretty weak. But TLT, bam, popped up over here and sold off. We looked at these three already. VIX, look at that. VIX went all the way up here to 30, came down here and closed down here at 26. So, sell-off's been happening, right? And we got to watch and see what's going to happen. Now, 3 of these are below this 200-day moving average, and just take a look at how sideways these 200-day moving averages are, which gives us a little bit of a hint that we're in a sideways market. And we got one indice above the 200-day moving average. And it ain't above that 200-day moving average by much, is it, Billy Bob? No, it is not up by much there. Whatever that fictitious other person's name going to be. Let's flow through here and look at, kind of take a quick look at these 12 sectors of the stock market. Okay, so technology popping up a little bit. Look at that. That's got to be some institutional buying. It's got to be some big money. This, see that volume, see this volume, see that volume. Look at that, how it's way over the average volume. Oh, way over the average volume, way over the average volume, way over the average volume, way over the average volume. That's something's changed a little bit in here. I think it's possible. I think there's a little bit of possibility that you got. I think it's possible that we have that plunge protection team. I think that plunge protection team might be at work here. I think it might be. Now, hey, you know me? And I haven't been trading in the stock market for 30 years. I'm not making 700% return in a 2-hour time period. So I don't know. I'm just taking some guesses at stuff. I don't know it all. I'm not like some of you folks. Some of you folks, you guys know it all. And but one thing I have learned is that when there's a huge volume spike, that sometimes it takes money. Right, these volume spikes are that's an indication of transactions. So this sector right here, this sector right here, and this sector right here, these are 3 big sectors of the S&P 500. When we got 2 of those 3, we got more selling coming in the banks, which would make sense, right? But considering what sort of bad news we have, look at that small sell-off here. I think the selling might be coming to an end, because it seems like the Fed is going to start doing bailout. 2008, there's a lot of these parody songs about people upset about bailouts. I mean, they're literally making songs, making fun of it, being outraged by it. But there should be no outrage, because G. Edward Griffin told us whenever he wrote that book many years ago, he already said. He already said the name of the game is bailout. Yeah, there it is. I will show you really quickly. All right, let's see if we can get to the chapters. Give us some chapters here. Come on. Come on. Let's see the chapters. I'm just randomly. If I were to tell you that I prepared for this video, would you believe me? I hope not. I hope not. And I hope you don't believe a lot of those people on YouTube telling you they're making all this money trading stocks because they got Ferraris. Yeah, just like I prepared for this, right? Oh, okay. I'm in a fantastic mood today. Chapters. Oh, here we go. This is what I'm looking for. Okay. Chapter 2. The name of the game is Bailout. Right? When was this book published? When was this? Does this easily show us? See, maybe it'll show us right here. We can find out this way. All right. Okay, 1997. All right, 1997. Right? If for those that, I mean, you didn't have to necessarily read it in 1997, but you could have read it 2 months ago. But it's been out since 1997. G. Edward Griffin already told you the name of the game is Bailout. Chapter 2, right? Why did he put it Chapter 2? Must be pretty important, right? The name of the game is Bailout. Bailouts are back. Right? They started maybe around 2008 or whatever. So sometimes you got to be able to put the pieces of the puzzle together. And the people on CNBC, Fox News, all your favorite news outlets that want you to choose a political side, they're probably not they're probably not telling you. They're probably making fun of good old G. Edward Griffin. But anyways, Let's you mean you can make fun of me? I really don't care. Your opinion of me has nothing to do with my ego, my friend. I'm a pretty happy camper because I knew the name of the game is Bailout. And so anyway, so where are we at here? I'm just having a fantastic time, right? So we see I'm having such a fantastic time that why am I having such a fantastic time? I'm having such a fantastic time because I enjoy these markets. I don't care if they're rigged. I don't care if they're rigged for me, against me. I'm happy to play the game. Let's flow through here relatively quickly, right? So what's going to happen? Let's see how the bailouts affect the market. Now, if there were no bailouts, we'd probably see these humongous drops. But maybe we're not going to see humongous drops. Maybe we're going to see sideways. What happened with the S&P 500? Okay, it got all the way up to here to that 390, where we close at 385, almost down here to this 380, and got that over kind of this abundance of volume in there, and we're hitting right here. Not a surprise it would get caught up right in that area. Apple. So Apple, oh look at that, traded all the way up there, the 152, closing down here. Right above, closing right here actually, but opened up right here below, right above this 200-day moving average. But look at that. Look at that volume. All right, that's not what we have been seeing. So, maybe people just buying up Apple. How about Microsoft? Same thing. Don't see this big abundance of volume, but we see this that's a wide body candle. Someone's in there buying these, and we got another wide trading candle here on the way down. That was Amazon over here. Meta, not as much of a wide range, but we're getting stuck in the middle there. Now, if you've been watching these videos, for some reason, whoever chooses this, for some reason, just had to put Google in here twice. I guess they couldn't. They tell you to diversify, but they don't want to diversify, do they? Oh man, sometimes it's not sometimes, all the time. I really get a good laugh out of this stuff. And I'll continue this laugh, but this is what we see Google doing today. Not moving as much, really hitting this support resistance area at 90. How about Berkshire Hathaway at the bottom end of its range? Look at that. What we're looking at now though doesn't look like a total economic collapse, though, does it? Nope. So either it's not a total economic collapse and all that fear-mongering news is nothing more than fear-mongering, or it is a really bad situation and somebody or some institutions are in there pumping a lot of money to keep the market up. Or it might be something in between. Nvidia. Okay, we just looked at Tesla. All right. Getting down there close to that 160. Nvidia kind of looking the same. Like, I wouldn't, when we're just looking at today, I wouldn't be guessing all these banks are failing. Look at that doji-ish action right there in JP Morgan Chase. Speaking of not diversifying, speaking of having Wall Street tell you to diversify and they turn around and not do it. Look at that. Look at all these stocks we just look at, same things. Well, not this one. Okay, the Qs is basically representing the NASDAQ. It looked like everything's great out in the world. Apple, Microsoft, Amazon, Google, Meta, Tesla, Google again, Nvidia, PayPal, and Adobe. Why does Adobe keep disappearing from there? Adobe and PayPal are the only ones that they're diversifying from. Why are the top 10 and the NASDAQ the same as the top 10? Almost the same as the top 10 and the spiders. I don't know. I can only speculate. And it doesn't really matter. It's just worth taking a note when these hypocrites tell you to diversify, but they don't do it themselves. Okay, we got a doji action going on there. Maybe over there in your pal that pays, or at least you pay your pal. And what's that going on over here in Adobe? Adobe slowing down around this 120 or 320. Not surprising there, right? So let's take a peek over at the diamonds. Dow Jones, right? Look at that, bottoming out. Right, we got a green bar, but we went all the way up here, pulled back. What's over here? We've got a pivot right in this area. Below this, you know, normal market conditions, I would say, it's probably going to fall down to here. But you know, if the treasury, if the Fed, if the powers that be, if they're going to start, you know, really blowing money into the stock market, we're going to see some stocks go up, regardless if the economy's falling apart. Like, hey, you seen what's that? Man, that guy's name escapes me at the moment. You know, he's on Twitter. Hey, you gotta start bailing people out. I'm losing money. Now you and I can't do that, but you know, those guys can. They can use their. Hey, this is a hint to tell you, I'm not going to give you political donations if you don't bail me out. That's right. You know, you gotta take care of who pays you, right? Politicians, right? So people that it's not cheap running for you know, not cheap running for office. You know, it takes millions of dollars when you're only getting paid like whatever $200,000 a year. Where does this multi-million-dollar campaign fund come from? You know, it comes from Goldman Sachs, comes from the hedge fund managers. Yep. And Goldman Sachs, speaking of Goldman Sachs, drop down. Okay, now we're seeing something. Seems like we hit the banks. Home Depot, how's that affecting Home Depot? It's not looking anything different. We already looked at Microsoft, Salesforce, anything happen in the sales industry. Look at that. Gap down here. Now we're back down to this area. Open up down there. Not surprising, right? Floated back down. How about McDonald's? Anyone stop eating because of this banking stuff? No, people eating the same, just a sideways amount in the eating. I'm just kidding. It's not just on eating while stocks move, or you know, if you got Crocs, it's not just if people bought your shoes. You know, if you got a CEO that you know, like the CEO of Goldman Sachs was out having prostitutes and being out there being a DJ. If you got bad stuff like that, maybe you know people like that. You know, you got Elon Musk goes on smoking pot on TV and stuff, and I guess his stock stays okay. So I don't know what these celebrity I don't know what these celebrity CEOs get away with or what's going on. I can just see that there's a little bit of a W forming right here, and we got the left hand side being a little bit lower than the right hand side. Does that mean it's going to move up? I don't know. It's got to really get past this area right in there. What stock is this? Honeywell. And I'll tell you what, man. If they start some stuff called quantitative easing, even though if they scream up and down it's not quantitative easing, then you probably guarantee the stock market's going up. Because the more they tell you it's not quantitative easing, the more it's going to push the stock market up, just like it always does. And over here on Verizon, no, it's not Verizon, that is Visa. I talked about what a lovely business model this is. All they do is print up some plastic. They give you some plastic, and everything else is basically kind of some paperwork. And that's a great business model. You know, can you imagine how great the margin is when you make let's say you make a $25 fee off from nothing. You know, that's an infinite return right there, or close to it. Maybe we got to calculate in somebody's whatever. But that's a good way to start a business. You know, if I could redo things in the past, maybe I would open up a credit card company back in the day when maybe there was less regulations. If that was ever a time. Amgen bounced up a little bit. Boeing kind of moving sideways, and we're going to finish this up, at least looking at these indices, by looking at IWM in the top 10 holdings. Okay, really had a wide range of movement there. Not a surprise, right? Catching this support right in there. AMC. Anyone go to the movies? Yeah, I guess they started going to the movies. How about Shockwave? What's up with Shockwave? All right, got a green candle coming in. Everybody's shocked over this wave of banking bailouts, and we got a strong Biohaven, right? The bank said, buy me out, give me a safe haven. And Biohaven said, sure, that's what we're here to do. No, I'm just kidding. I have no idea what they do. And but anyways, I do know that is a bullish candle right there. Intelia. What's up with Intelia? Why don't you Intelia me what's up with Intelia? And having a pivot right here. We got some movement up. Crocs. I don't think I saw anyone wearing a pair of Crocs today. And down to this area where it pivoted before, right around that 110. See what's going to happen. There we go. That's some chart industries. That's what I'm talking about, man. If all this, when the economy is going down the dumper, we're like, why can't we have some stocks go down the dumper too? Let's get some more stocks looking like this. Well, I think the plunge protection team, I think they're going to do some they might do some financial engineering. I wish they'd just let it fall apart. Come on. Don't just give us a good buying opportunity once every 10 years over freaking when everybody's getting sick. Like, how about when the banks are falling apart? Come on, give us some buying opportunity. Look at that. That's almost, this candle looks like there's good news happening. And over in the semiconductor world, what's up with that? It's not quite, I don't know if it's, man, I don't know. I have to ask Greg Capra about that one. Consider this as, where's our pivot right here? Technically, if we look at the objective master trader stuff, I got to study that course a little bit more. That one's a little bit out of my comfort zone. That's why I like selling options, my friends. Look at that. Look at that. I maybe I'll sell 95. Where else would I sell? Maybe somewhere in here. All depends. But for me personally, I think selling options. I think figuring out where a stock's not going to go is way easier than figuring out where it's going to go. And Apelios just kind of floating back down. And 62, not a surprise, floating down there. So, I don't know how many minutes this has been. I hope it's been as good for you as it has for me. And if it hasn't, that's what I think about that. Look at this, right? This is our lagging indicator, and it's showing a big movement down. All right, let's take a peek at this line chart, weekly line chart. We got some bad news in the market. We're back down here, but look, it started getting close to this 380. Now doing it, where are we at in relationship to 400? We're significantly closer to 380 than we are to 400, right? And was it a couple weeks ago, we're looking to see what's going to happen around 420. We see it continues to go away from 420. But guess what? Doesn't mean we're in bear territory. I think we're in sideways territory. The sidewinder. You know what a sidewinder is? Let me draw you a picture of a sidewinder. You don't even care, do you? You don't even care about my sidewinder. All right. Look at this sidewinder right there. See the sidewinder? Look at this. Got a snake tongue out there. And he's widening. No, I really don't know. But I don't know. We got a bear going down. We got a bull going up. What kind of animal do we got going sideways? Snake? Sidewinding snake? Do they even have those? How about what about is it the flounder? Is that the type of fish that goes on its side? I forgot what those are. I went fishing for those in Alaska when I was 15. I forgot what that was though. Eye rotates up to the top. It was pretty tasty. Halibut. That's it. This is the halibut on the side here, going sideways. So that's it, my friends. If you can pick direction, this is great for you. This is absolutely great. If you got the time and you got the skill to pick direction, you don't got to bring the kids to school. You don't got to be at work. You can be retired in front of the computer. Go for it. Do it. Absolutely. If not, consider selling some options. In fact, consider selling cash secured put options on stock you don't mind owning. Why? Because at contract expiration date, your contract is going to expire worthless, or it's going to expire in the money. Now, what happens if it expires worthless? You keep the premium. What happens if it expires in the money? You keep the premium and you buy at least 100 shares of a stock that you wanted to own. Oh my gosh. Does that sound too good to be true? I hope so, because if you look around at what's going on in society, there's a lot of stuff we wish it was. It's so bad we wish it were not true. So we need a little bit of stuff to make us happy, right? And I tell you what, you good buddy Brent, I love selling me some cash secured put options on stocks I don't mind owning. Aloha.